You're listening to AI Prism from Seoul Economic Daily.
It's Thursday, May 21. I'd like to share some thoughts about global investors.
Yeah, today we are unpacking a pretty massive convergence of macro forces hitting institutional portfolios.
Right, like a perfect storm for anyone managing capital or, just tracking global macro trends.
Exactly. We've got soaring bond yields, geopolitical flashpoints, and a really critical semiconductor supply shock all colliding right now.
So let's start with those yields. I mean, the U.S. 30-year Treasury just hit 5.18%, which is huge.
It is, and the market reaction was brutal. We saw a $15 billion block sell-off in just 1 hour.
Wait, 15 billion in an hour? That's what, roughly 22.6 trillion won?
Yeah, exactly. And a recent Bank of America survey puts a 60% probability on yields actually reaching 6% within 12 months.
So the bond vigilantes are really back, punishing the markets for inflation fears.
They are, and a lot of this is driven by the Iran conflict. The window for a ceasefire there is, well, it's down to days now.
Which keeps oil and global supply chains in limbo, right?
Yeah. Right. You see global ripple effects everywhere. Like the UK is floating food price caps, and Japan is seeing packaging shifts because of naphtha shortages.
Oh, they can't get the raw materials for plastic.
Exactly. Though a Korean tanker did finally clear the Strait of Hormuz after 80 days, so there is some movement.
Well, transitioning from those macro geopolitical shocks to a massive corporate one, we have the Samsung Electronics general strike starting today.
Yeah, this is a massive deal. It's centered on their DS division, which is the Device Solutions Unit, basically their semiconductor wing.
And this is over a 40.5 trillion won bonus dispute, right?
Yeah.
Which is about 28.9 billion US dollars.
That's the one. And just to show you the impact, during a previous half-day rally, their memory output dropped 18.4%.
And foundry operations dropped 58.1%, I think.
Right, 58.1%. So estimates for the total potential strike damage are hitting 100 trillion won, or roughly 71 billion US dollars.
That is staggering. I mean, no wonder Chinese and Taiwanese semiconductor stocks are already rallying today.
Oh, they're surging because you have to connect this supply threat to what just happened at Google I/O 2026.
Right, the Gemini 3.5 flash announcement.
Exactly. Google claims it costs half as much as OpenAI to run. This drives what we call AI inference cost deflation.
So basically, it's cheaper for the AI to process information, or, to think.
Yes. And when inference gets cheaper, developers use it everywhere. That heavily spikes global compute and memory demand.
Right at the exact moment Samsung is turning off the factory light.
Exactly. It's a collision of infinite demand and a sudden supply wall.
Wow. Well, pivoting to trade, we also saw a major geopolitical development. China's Ministry of Commerce in the U.S. agreed to a mutual tariff reduction framework.
Yeah, a $30 billion framework, which is about 45 trillion won. Though the outcome for rare earths is still pretty ambiguous.
Right, but this leads to this crazy market paradox, because despite massive foreign selling, Korea's MSCI Emerging Markets weight just doubled to 21%.
It's wild, right? They're just 1 point behind China now.
How does that even happen when foreign investors are pulling out?
Well, it's driven by the tech concentration of the KOSTI, which is the Korea Composite Stock Price Index.
So the big tech companies, the K-ball, are just propping up the whole index.
Exactly. The K-ball valuations surged so much from AI demand that it mathematically overwhelmed those foreign sell-offs.
Oh, I see. So passive global funds are basically forced to buy in to match the new 21% weighting.
Right. And because of this resilience, there's now a 60+% probability that Korea gets included on the developed markets watch list this June.
Which could finally help fix the Korea discount, where their stocks persistently trade lower than global peers.
That's the hope. It would be a huge structural shift for capital if it happens.
So leaving you with a final thought to mull over. If AI inference cost deflation drives unprecedented compute demand, while Samsung's production lines sit idle, are we watching a permanent restructuring of global semiconductor pricing power?
That is the ultimate question we need to be asking right now.
That's today's AI Prism, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.